What's going on, everybody? My name is Jason. This is the inaugural broadcast for the White Knuckle Traders. We started this channel as a way to recruit the recreational investor who trades stocks and options, just getting into it or does it on the side as a way to generate a passive income. In this community, we're going to share ideas and we're going to try to help build wealth together. And I'm really excited about it. I have been in education for 20 years, and so I've always been a recreational trader. I love stocks, I love options. I've been doing it for so long. I'm not a financial advisor, but I'd love to share my journey with you. And we want to try to create a community where we share ideas and build wealth and financial freedom. And so that's what the White Knuckle Traders is all about. This is our inaugural broadcast, and I'm going to take you through some highlights here. So, don't want to take up too much of your time. I'm going to highlight what this video is all about today. So, we're going to look at what's been happening in the markets. As you know, November has been a very, very volatile month. We're going to talk about what catalysts have caused that to occur. We're going to look at what's going on in the news this week and in the coming weeks ahead that might implement change to this market. We'll do some chart analysis, and of course, I'm going to go over what I'm personally doing with my portfolio. Disclaimer, again, this is not financial advice. I'm not a financial advisor. I'm just sharing what I'm doing in my portfolio for educational purposes, and results will differ day to day, week to week, and month to month. Purpose is really just to educate you, and I'm going to be showing you what I'm personally doing. I would love for you to join in this journey by subscribing to the channel and clicking the like button if you like what you hear today. And also, if you're interested to join our investment community, we really want to try to recruit the small, the medium-sized accounts. If you got less than 100,000, pulling together great ideas and working together collaboratively and making it happen. And that's what the White Knuckle Traders is going to be all about. If you want to join the White Knuckle Traders, there's the QR code right there. It's definitely been a white knuckle month, that's for sure. November has been pretty volatile, not quite as crazy as April, and hopefully we don't get that crazy. The craziness really started all the way back on October 29th. That was when the FOMC meeting occurred. That's when the rates got cut 25 points. But in that meeting, Jerome Powell stated that a rate cut in December was far from a foregone conclusion. And in saying that in his remarks, that lowered the chances of a rate cut happening on December 10th at the next FOMC meeting drastically. And it also brought a lot of volatility into our markets. Currently, if you go to the CME Fed Watch, you can see that we're back up to a 70% chance of getting a rate cut. And so these odds of getting a rate cut have oscillated quite a bit. A week ago, it was 30 or 40% chance, and now we're all the way back up to a 69.4% chance. So there is a lot of uncertainty around this, and I think this was priced into the market back in October. And once there was the chance of it not happening, it certainly helped to create a lot of volatility, which I'll highlight in just a moment. Interestingly enough, though, if you look at the SPY, right here was October 29th. That was the day we hit the high. And then we sort of oscillated a little bit back and forth. And then we've kind of fallen down here quite a bit in the last couple of trading sessions as a result of some of the other fears that have interjected themselves into the market. The S&P is actually, or the SPY, excuse me, which tracks the S&P, is actually fallen below the 50-day moving average into this region down here. It did bounce off the support Friday, which was a good sign, and is hanging in there right around 660. And I'll talk a little bit more about that in just a moment. The QQQs, which tracks the Nasdaq, also you see the same thing. The highs came in right on October 29th, and the Nasdaq has become much more volatile and trended more to the downside since that particular meeting. Looking at some of the stock drops since the FOMC meeting on October 29th, Nvidia is down 15%, Microsoft 23%, Tesla down 15%. SoFi really got hammered a lot more last week. Robinhood's down 27%. So some of the high beta stocks, some of the newer companies that are really getting their foothold, like SoFi and Robinhood, really got hit hard. CoreWeave, which IPO'd earlier this year, is down 49% since October 29th. Meta's down 21%. MicroStrategy, as you know, with the Bitcoin collapse, is down 41%. And Palantir's down 22% off of its all-time highs as well. So we've seen a lot of volatility in this market. And depending on what you're holding in your portfolio, you may really be taking it on the chin right now. Some quality stocks that have been able to withstand some of the craziness of this environment include Apple and Google. Those have done really well. Eli Lilly soared to all-time highs this past week. They're now the first healthcare company to hit the $1 trillion mark. And we have a lot of amazing companies at great discounts as well. So, I mean, this pullback certainly provides opportunity, but it's timing sort of or gauging where the market's going to go from here. I don't like to say timing because it's pretty hard to do that. Some of the other catalysts that has created all the volatility here in the month of November, obviously, we had some of the bank CEOs come out 3 weeks ago and talk about corrections of 10 to 20%, that there was a lot of froth in the market, particularly with the AI trade. Michael Burry, the big short guy, came out and placed large shorts on positions on Nvidia and Palantir. So the negative sentiment that was put out there earlier this month, also in collaboration with Jerome Powell and the uncertainty around the rate cut, has certainly created some volatility in our markets. And then in addition to that, we've not had any real data come out due to the government shutdown. And we're going to get a little bit of data this week with PPI, but as far as actual up-to-date data that's relevant to determining the path which rate cuts go in the coming months, we're not going to really see anything substantial till the middle of December. And so as a result, when there's uncertainty, markets don't like that. And as a result, we've had a lot of volatility, which I will show you in just a moment. Some of the events this week, there's really not a whole lot. Obviously, it's a short week because of the holiday and Thanksgiving. So we don't really have anything on Monday. Tuesday, we have the PPI and core PPI, and certainly that'll be a relevant number, and that will certainly be somewhat of a market mover. But overall, it should be a quiet week. Seasonality, this is when we start to see the markets really ramp up and usually accelerate upward towards the end of the year in what they call the Christmas rally. And hopefully we get the Santa rally this year. One of the big catalysts on Friday, actually, there was two of them. The New York Fed President, John Williams, came out and remarked that there may be a rate cut in December, and that's what actually flipped the odds in favor of a rate cut. And then President Trump alluded to the idea that NVIDIA may be able to sell their H200 chips to China. And if that's able to happen, that opens the market up for NVIDIA, who claim them as a zero on their balance sheet. So that certainly would bolster NVIDIA and the entire market if that does happen. So these are things to watch for as well. As I said, volatility has gone up tremendously. So if you look right here, this was October 29th, and since then the volatility has gone up drastically. We actually peaked out above 28 or close to 28 twice last week, which seems to be a resistance zone. Friday, we did see some buying come back into the market after Williams released his remarks. And so as a result, volatility came back down to 23. And hopefully this week, normally the week of Thanksgiving, it gets a little bit quiet, and hopefully this will trend back down, which would be a good indicator of where we may be heading in December. My thesis, I think the selling pressure is more manipulated than actual event driven. If you go back to April, obviously the uncertainty around the tariffs and what impact that was going to have to the global economy and to inflation certainly was a major catalyst in creating the big sell-off that we had. And thus far, for the most part, that really hasn't come to fruition. But we do have a lot of uncertainty because we don't really have a lot of data to go off of. The uncertainty involving the rate cuts, that's created the volatility. And the possibility to be slightly bearish in the very short term still seems to be something to keep an eye on. And we're at really critical support levels on both the SPY and the QQQ. And we'll have to see how trading goes tomorrow to really get a feel for where that's going to go. But, there's a lot of tailwinds. The Fed should be more dovish moving into 2026. When Powell is out of office after May, you would expect that a Fed chairperson is going to be put in that's more dovish. Rate cuts should be coming into play. It's anticipated that we could see up to three between now and the end of next year. And so as a result, markets have a lot of tailwinds, and it's still possible, in my purview, that we could get to all-time highs by the end of the year on both the SPY and the QQQ. Just my opinion. Taking a look at some stock charts, Microsoft peaked out right around October 29th and has really been in a very strong selling pattern. It actually came all the way down to its 200-day moving average and bounced off of that on Friday. My opinion of Microsoft is that's a horrible chart, as President Trump would say, horrible. And we want to see some consolidation and some support being established here. But I'm looking at Microsoft, man, they had such a great earnings report, and they're such a strong company that if they can develop a support line, that's something I'm going to definitely be looking at a leaps play on. And when we get a little bit further into a support zone there, I'll give more thoughts on that. Nvidia's been holding the line right around 180. 175 is a good support level here. Um, they had the great earnings and then the massive sell-off, which happened on Thursday. We'll have to see how Nvidia performs this week. If they break through that support zone around 175, then they might track a little lower towards the 150-day moving average. If they're able to gather some strength and break through the 50-day moving average, which sits right around 185, then we might see another bullish move into the end of the year. So certainly something to look at. But Nvidia's had such an amazing quarter, such great earnings report, and there's so much potential upside still with this stock. So even if it does come down, it's going to present a wonderful opportunity. SoFi has been an unbelievable stock this year, and if you've been in it, you've made a killing. At one point, it was up over 200%. It actually held up quite well until last week. It had a very strong downside. I actually fell all the way down under $24 and then had a nice little pop at the end of the day. You can see that this is a nice bullish wick here, and we'll kind of see how things play out into the Sunday night and Monday trade. But certainly it had momentum going into the weekend for maybe a pop back. If it was going to turn bearish, then we'd be looking down here at this 150-day support zone here, which sits right around 21.50, $22. But to get SoFi down at this price range is pretty good opportunity, I think. Robinhood's been another great stock in the year 2025. It's also been in a pretty steep downtrend as well. Actually broke through its 50-day moving average. It bounced off the 150 and then popped back up to almost 109 in the after hours on Friday. Again, we're seeing some great stocks, great growth stocks that have so much potential pulling back to multi-month lows, which really could provide wonderful opportunity for when the market does resume a bullish trend. So certainly things to look at here. Meta is another stock that really got hammered. They had a great earnings report, and because they took the one-time tax hit due to the big beautiful bill, and incorporated that lowered their earnings per share on paper, and as a result, we saw the massive gap down. Now, there was some warning signs going into the earnings because Meta broke through their 50-day moving average, and then they did that little brief head fake before the big gap down. But what we're looking at now is we're starting to see a support zone right around 581 here. And if it can sort of hold this and consolidate here, I'm definitely going to be looking at this for a potential leaps play in my account. So I'm going to kind of follow this one closely. It's been trading between 580 and 605 now for the past couple trade sessions. And even though last week was a bad week, it didn't really get to hit too bad. It's been kind of trading in that zone. Amazon had an amazing earnings report, but because of the CapEx spending and the fears around AI and taking out additional money for this AI infrastructure, they trended down. They actually bounced off their 200-day moving average on Friday and then finished up at 221.50. So Amazon back down to pre-earnings prices. Certainly looks like an attractive play there as well. That's something I'm certainly eyeballing. Bitcoin has been in a flush now for several weeks after the big October sell-off, and really we're just looking for it to find some kind of ground and to begin moving forward. One thing that Bitcoin has been an indicator of in the year of 2025 is it really indicates the risk on, the risk off trade. And so if the risk on trade is back and Bitcoin starts to become bullish, the rest of the market is going to probably rally with it. And it's been a leading indicator now for the last several weeks and months. And ironically enough, into the Thursday intraday sell off, Bitcoin began selling off several hours prior to that. It was almost like it was telling us something. Ethereum will track the same way. Both of these assets have been hit very hard. So we'll just kind of wait and see if they can continue to break out of these lower highs and lower lows patterns. So, I mean, you kind of look at it over the last 6 weeks, it's been lower highs and lower lows. We really need to start to see a little bit of upward momentum there, and then we'll know we're gaining traction there. This is my Robinhood account. I'm going to start with 76,400 bucks. It's a small portfolio. My goal is to scale this up to six figures and beyond. And I'm going to highlight what I'm going to be doing to allocate my funds to make this growth happen. And it's going to be part of my journey. And I will be posting videos showing you what I'm doing, not only on YouTube, but you can follow me more closely in my community, and we'll kind of highlight in greater detail the trades that are being made there. I'm not a financial advisor. I'm just sharing what I'm doing in my portfolio for educational purposes. Results will differ month to month. In this kind of environment, I mean, certainly there's a lot of interest and temptation to want to buy leaps on some of these stocks that have really pulled back, that are good quality companies that have taken it really on the chin the last few weeks. But we don't really know how much more downside there is, and you're taking on a lot of risk because of the high volatility. And so it's a great environment to sell options. And so I'm going to be looking to sell cash secured puts. I don't mind owning some of these stocks at cheaper prices, and with the implied volatility being higher due to the higher VIX, we can take advantage of some of the higher premiums out there. Some of the stocks that I'm targeting are SoFi, Robinhood, Nvidia, Iron, which I'll mention in just a moment. Leaps potential. I'm going to be looking at Meta and Microsoft. Meta's trading at a very low PE ratio. It's one of the cheapest Mag 7 stocks. Their cash flow is incredible. Their revenues were incredible. Microsoft's an unbelievable company. Both of them are trading at a huge premium rate or a huge discount right now. It's a wonderful opportunity. So those ones I'm going to be eyeballing for leaps. Not necessarily yet, but in the coming days and maybe week or two. SoFi, yeah, if I'm going to make a move on SoFi, I'm not going to disperse all of my cash all at once. It's going to be incrementally, but I'd be looking to sell puts on SoFi. If I was going to do it, I'm going to be looking out to December 19th, which is the third Friday of December. I'd be looking at the 23 strike. It just seems like a good price point for me. I typically like deltas between zero point 0.2 and zero point 0.3. And my return on investment is going to be somewhere around 4.5% here. And that's a risk profile that I'm comfortable with. If, by December 19th, SoFi's under $23 and I get assigned the shares, I'm perfectly happy with that, especially since it was just $32 a couple, like 2 weeks ago. So SoFi is definitely going to be one that I'm going to sell cash secured puts on. These prices that I'm showing you will adjust, obviously, based on how the market performs overnight tonight and prior to the market opening on Monday morning. But this is just kind of giving you a ballpark. Robinhood, I'd also going to be looking to sell cash secured puts here as well. For me, I'm comfortable at the $95 level. That puts me right at a 0.25 delta. And this one here is about 3.7% ROI. And I just feel really good about that. If, Robinhood would have to come down another $13 in the next month or so. And if I'm able to snag Robinhood at $95 a share, that's okay with me because in my mind, I think Robinhood's going to be $150 to $200 stock within the next 12 months, if not sooner. Nvidia, obviously, their earnings were incredible. There's so much potential upside with this company. They just keep hitting it out of the park. For me, I'd be looking to sell a put right now, right around 160. The delta's a little bit lower, which means the risk is a little bit less, and our return on investment here, our ROI, is going to be a little bit lower. Probably this one comes in around 2%, but that would be a great entry point if it were to pull back to that level, and if not picking up 2% premium on Nvidia between now and December 19th would be just fine with me. And then there's Iron, and Iron's this company that's made a big shift into the AI space. It's integrating in data centers. It was just a Bitcoin mining company, but the strategic directional change of integrating data centers and providing renewable power has allowed it to become a profitable company. Its PE ratio sits right around 21. And now that it's profitable with a low PE ratio, it's got a potential to really become a high-flying stock. And we saw this stock really run up in the last several weeks, made a dip, and then obviously since the big pullback here in late October and early November, it's come back down to levels right around $40 a share. But this company has potential growth and upside that I certainly want to have an opportunity to be exposed in. Now, it's got great implied volatility. And so I would like to be a part of this one. And for me, I'm going to be looking at IRIN around $30 cash secured put. Now it's a low delta, but even at that, my ROI here is still right around 5%. So it provides a wonderful opportunity to generate a nice premium while lowering the risk tolerance a little bit. However, this stock's very volatile, so it's not all around a possibility that it could pull back to $30. But I'm comfortable being in this stock too. I'd never sell a cash secured put if it's not a stock that I didn't think I wanted to own. That's the most important thing. That's it for this video. I'm going to be putting more videos up in the coming days and weeks ahead. The White Knuckle Traders is a new community, and if you're a new trader or you're a recreational trader, we would love to have you join our community. We're going to be doing stock trades and option trades. I'd love for you to follow in on my journey as we take 76,000 and try to build it into 100 and beyond. We want to make money, 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 and we want to be successful together. So if you like the video and you like the input here, please like and subscribe, and we'll see you in upcoming videos. Thank you.